All right, last video for the day, and I have fulfilled my promise of bringing you one video every day. And this is gonna be a quick and easy one, but it is something that's dear to my heart. And just like that, I'm blanking on it. What did I want to talk about? Oh, this is not good. I have to stop and start over. This is what's called Business 101. Okay, this is the very first thing that you learn once you get to the college level accounting courses, and it's basically the life cycle of a business. Okay, I don't really have anything to point to for this because it's one of those things that I learned in college that you just have to read between the lines, right? They'll give you all the information, but then you have to read between the lines to figure out how to apply it. So I'll explain to you. Here's the life cycle of a business, okay? And again, this is what's considered business theory or financial theory. And the reason why it's a theory is because it's not a fact. It doesn't happen, 100% of the time, but it happens enough that we've witnessed it and we've seen it and we can say that it is a theory, okay? So here's the way it works. A business starts off by basically making lots of cash, okay? Making lots of cash and spending lots of cash. The reason why is because they don't have any credit, nor do they have the finances to cover extending credit to their customers, right? They cannot afford to say, no problem, pay me next month, pay me next year. They need their money now, okay? This is a brand new business. So they're making a lot of cash, they're spending a lot of cash, all right? Now, as that business grows, okay, they because of the cash they're bringing in, they're able to gain credit, okay? And that credit allows them to offer credit to their clients, but also to leverage their assets and build their business faster, okay? And this also talks about just people in general, okay? That's where I get this stuff from. And the reason why is because, like I said before, everyone is a business. Everyone is a business. So this business life cycle is also the life cycle of us people, because we live in a capitalistic society here in America, especially Texas, right? When you're young, it's all cash, right? As you get older, you have what's called bills, liabilities, right? That's credit. When you sign a contract to say you're gonna pay X amount of dollars for an entire year on a cell phone, that's a liability. That's a bill. That's credit. They're extending you credit, which is why they have to check your credit before they give you that cell phone contract. Okay, your light bill is the same thing. They check your credit to give you that 1 year contract on your light bill. So that's very simple stuff. Okay, so let me go back and let's do this again. So we're talking about businesses, but we're also talking about people as well. All right. So when you're young, when the business first starting out, everything is cash. Making cash, spending cash. Okay. As the business grows older, then you're going to receive credit and offer credit. Okay. Now, the business is going to continue doing that. And the idea is that the business will continue getting more credit and more credit and more credit and more credit and more credit. At some point, the business has to die. The business has to die, y'all. The business has to die. Okay? And at some point, you're going to have more liabilities and credit than you have cash. When that happens, you're what's called insolvent. Once you're insolvent, then you are declared bankrupt. Even if you don't declare bankruptcy, you're considered bankrupt, right? Now, once you file bankruptcy, I'm sure you guys know this, different things happen. You either work out a deal where you pay back, the loans over time. You can pay less than what you owe, all these different things. You can just simply cancel debt as well, right? Some of you know what a 1099-C is, maybe. That's a cancellation of debt. If you owed, like, let's say a car company, you owed on a car or whatever, and you didn't pay the car, and they said, oh, don't worry about it, we'll just cancel the debt. What's happening is the car company is writing off that bad debt expense, so that's a tax deduction for them, but then sending you a 1099-C, okay, which is income for you. And I'll do that video on tomorrow. All right. So anyway, that's what happens right now. All this credit, all these losses, okay, are going to be considered business losses. Okay. And you'll be able to deduct those on your tax return. And then you declare bankruptcy and then you start a new business. All right. That's the business life cycle. That's business 101. First thing you learn in college level accounting. Now, what does that mean? This is what I got from it. You ready? Okay, here we go. My game plan, my purpose is to start a business, right? Use my personal credit to then get corporate credit, okay? Max out that corporate credit. Increase that corporate credit limit as high as I possibly can. Max that sucker out. Boom. Close down shop. No longer a business. Y'all can kiss my behind about that corporate credit, all right? Write off all those expenses on my tax return and start another business and do it again while my personal credit remains pristine. So I'll reiterate. Let's go back a little bit. The game plan is build personal credit, use personal credit to get corporate credit, use corporate credit, extend, increase the corporate credit limit, right? You do that every 6 months or every year. Just ask for an increase every year, right? Pay on it, ask for an increase every year. At some point, boom, you don't pay that credit card, you don't pay off that loan, you let that shit go to the corporate credit, right? And let them handle it, right? While your personal credit remains pristine. Now, there's a couple things you can do to further protect yourself in situations like this, and it's called a trust. Okay, we've talked about this before. A trust simply means that this is no longer your money. It's entrusted to somebody else. So I can take all my personal money, put it into a trust, use nothing but the business credit, right? Default on the business credit. They're going to come to me and say, oh, you owe us money, blah, blah, blah. I said, I ain't got no money. I don't have any money. Legally. Literally, I don't have any money. That money's tied up in the trust. That's not me. I can't do nothing about that. And that's it. They can't do nothing about it, right? We all know Donald Trump has done this over and over and over again. What was the other guy that ran for president? Was it John Kerry, I believe? No, it wasn't John Kerry. It was the other guy that ran against Obama. I forget his name right now. But anyway, his job before he ran for president was literally buying companies, running up their credit, declaring bankruptcy, and moving on. And he did this over and over and over again. Not John McCain. What's that guy's name? I can't think of his name right now. But look him up. Look him up. The guy that ran against Barack Obama, his job was to go into companies, buy them, run up their credit, use all that credit, declare bankruptcy, and move on. And he did this over and over again. So anyway, that's business 101, the business life cycle. My last video of the day, I did that. I holla.